Okay, a couple more here. First one, do you have any issues with the reported jobs numbers? They seem to come up with, I guess, the government seems to come up with whatever job number they want to get reelected or to raise rates.
Of course. I mean, the government has problems with their jobs number. They've already acknowledged that the standard error in the non-farm payrolls number is like 90,000. 90. Like, in other words, the number could have been 180, and we won't know until it gets revised, or it could have been 360. I mean, it's this crazy thing, and I think the thing about the jobs numbers, take away the incongruent nature of that one jobs number relative to, say, the Challenger layoff chart, which shows you a breakout in announced layoffs. Or you look at any subcomponent, like employment component of like any manufacturing or cyclical index, and you look at the skew to that non-farm payroll number relative to some of the sectors, like a skew away from what's actually happening in the state of Texas, for example. There's so many different issues. But the biggest issue of them all isn't mincing the words between these jobs reports or the U6 versus the U upside down, two double overs. It has nothing to do with that. The real risk has to do with what I've said is the ongoing risk, which is the Federal Reserve's forecasts, and they're anchoring this entire edifice of policy rate hike expectations on the most late cycle of economic indicators, which is employment. So they have 19 different ways to look at this. You're looking at the end of the movie, 19 different ways. And for those of you who still aren't with me on this, think of it like a movie that's played out. The end of the cycle is here. We're super late cycle. And they just want you to look at the credits after the movie and make something out of it or make something up about it. And nobody cares.